Hey guys, what's up? Welcome to another episode with me, Shashank Godoppa, and I am a SEBI registered research analyst. And today I want to show you something that is stemming in India in the stock markets, which I believe personally is a bit scary. Now, what happened in the world recently is the whole South Korea bubble basically came out and burst completely, right? And why did that happen? That was mainly because of something called leverage. Now, if we look at South Korea, if you understand the case study of South Korea, what was happening is a lot of people were selling their homes, they were taking money on loans, personal finance loans as well, and then they took that money and invested in the market. And when they invested in the market, they didn't do normal investing. In the market, they took 3x to 5x leverage. So basically, I took 100 rupees loan from the bank at let's say 10% interest rate. I'm giving Indian example. I took that 100 rupees and I invested in the market at 5 times leverage. And this is on the assumption that everything will go up and it will continue to go up and I'm okay. And this is exactly what happened because a lot of people in South Korea wanted to get rich very fast. So they sold their homes and did all of this. And obviously the South Korean market basically crashed. Now let me show you exactly what happened with more data. And then I will come to what is happening in India as well and why I'm a little worried as well. Obviously we are not in the same comparison to South Korea. But what I'm going to show you will shock you a little bit. So please stay tuned, okay? Now, if you look at KOSPI, right, the South Korean index, see, we can't say that it was bad only because South Korean index also did the rally of its lifetime in the last 1 year. From the last 1 year, it went up 120%. And by the way, this is an index going up 120%. This was mainly driven by two companies. One was Samsung and one was SK Hynix. Why these two companies went up so much? Because Samsung and SK Hynix provide the memory bottleneck. Okay, so AI is having a big memory bottleneck. Compute is exploding. Google's demand is going up. And there is nobody giving good amount of memory. So only Samsung and SK Hynix were the memory providers. Similarly, you saw Micron and all of them also going up. Now, the revenue of these companies didn't go bad. They are still going up only. Okay, if you look at SK Hynix's recent revenues, they were amazing and they're saying another 2 more years this will go. But what happens when euphoria comes into the market? The fundamentals are still growing. Let's say fundamental went from point A to point B. But the madness of that euphoria of that thing gave the valuation 5 years into the future. And when leverage came into the system, that became a problem. So a lot of South Korean people went to the bank, took loans and invested in the market, which created a lot of artificial inflation and artificial liquidity in the market, which was from borrowed capital. And you and me both know whenever something like this happens, it never ends well. So when we saw the whole market actually tumbling down from the top, it was more than selling. It was selling forced because of liquidation, right? People were selling very fast because they had to go pay their loans, and that created a massive problem across the entire industry. And loans became a big problem. And immediately after that, South Korea launched something called National Debt Hotline and basically said that if anyone feels like doing suicide after this, please give us a call. If you have loan, we will help you out. So this will basically lead into a system where South Korean government will have to come in and forgive some loans and bail out most of the people. I think that is the only outcome that is going to happen. And what happened here is what I want to show you as well. Government scrambles to crack down on single stock leveraged ETF. Now, what is a single stock leveraged ETF? Let me explain. Let's say we have Reliance Industries in India. Now, if you want to buy Reliance Industries today on leverage or without leverage, there are only 3 options. What is the option number 1? You go buy Reliance on cash. Great. Option number 2, you buy Reliance on something called MTF, where you pay an interest to the broker. Okay, so you buy, again, you get 3x, 4x leverage on Reliance. Then you say, okay, I want to do futures and options. So you will go buy either an option or you will go buy future. Again, it is a leveraged product, okay, because you are only putting in one part and the broker funds the remaining part as well. So that is how you would buy Reliance today. Now, what is single stock leveraged ETF? And this is also famous in US, it's not just South Korea. They have something called Reliance 2x ETF, Reliance 3x ETF, Reliance 4x ETF. Now, what is this ETF and what is this 2x, 3x? If Reliance goes up 1%, a 2x ETF will go up 2%, a 3x ETF will go up 3%, and a 4x ETF will go up 4%, which is great. If I believe Reliance is going to go up, if I buy 100 rupees and if Reliance goes up by 1%, I actually make 2%, double of what I would have made. But the same logic and same rule applies on the bottom side as well. Now, when you do index-based investing, in US we have QQQ, we have SSO, and then we have TQQQQ, which is triple QQQ, right? What happens? Index usually is not very volatile. It might go down 1%, 2%. Then the triple leverage will be 6% down. But when you talk about a stock can go down 30, 40%. Now, imagine the ETFs that are there, the leveraged ETF, 1x, 2x, 3x, they had what? To 5x ETF. So if you have a 5x ETF, you are definitely going to have a lot of problem, and that created a huge problem in the entire ecosystem. And $38.7 billion were lost only on leveraged ETFs, which is insane, right? Offices became silent, dinners became silent, nobody's going out for dinner, and Korea to cap portion of single leverage ETFs because this is something that they launched and they thought that this will be okay. We don't have to catch it. And the worst part, everyone knew this was leading into this problem because when the index went up 100%, yes, a leveraged ETF would make 3 times more or maybe 2 times more. So people did make a lot of money. But the biggest problem in the world, not just India or any country, is that people don't know the exact time to exit. Obviously, because we don't know. FOMO will put us back in. If I exit at 20% and the market goes up again, I will put my money back and continue. So not only did they invest in 5x leveraged single stock ETF, they also started taking a lot of loan, which led to an insane, fall of the entire market. And this is SK Hynix. This came out in US. It listed there as well. And that also fell down a lot. So, these are the issues that we always say, right? We should be very careful when you invest. Any kind of leverage product is a bad product. It is not bad. It is bad only if you don't know what you are doing with risk management. It is good for people who love risk and love leverage and they know how to manage the risk. But if you don't know how to manage the risk, you are in a problem. Now, who doesn't know how to manage a risk? Usually it is the retail people, right? Because we have not been taught a lot of risk management. We know, but the greed and all of it kicks in. Now, why I'm saying this is a problem in India? Let me show you that problem, okay? And let me show you only with data because I don't believe in non-data stuff. Now, Nitin Kamath also tweeted this recently, saying we are all seeing South Korea, but everyone is missing the point on India. And in India, if you remember, 3 years ago, everyone was doing F&O trading, which is also leverage-based trading. And then SEBI came out with the statistics that 9 out of 10 traders lose money. So me and you know this, right? But it was borrowed money from the broker, not from the bank, okay? Now what is happening? This is a concept called MTF. A new concept called MTF came in, which is called margin traded funding, where the broker will give you the margin to trade more. Okay, so you can take 1x, 2x, 3x, 4x leverage as well, right? And the broker will fund that margin, and in return, he will give you it at a percentage of interest. And the interest can go anywhere between 12% to 15% in India. That is almost 1% a month. So that is something that is basically there, which has come in India called MTF. Now, I know most of you guys know it. For the people who didn't know it, this is what it is. Now, this can be applied across any stock. Okay. Now, that is the problem. It is not limited to F&O stocks. It can be applied anywhere. So if I feel that, let's say stock ABC can go up, I can go and tell the broker, I will put 100 rupees, you give me 400 rupees at a 1% interest. And I will take this call. If I do well, I get 4x. If I do bad, I lose that money and I have to give him that interest as well. So that is the problem. Now you might say, yeah, Shashank, but this might not be growing very fast, right? South Korea had a very big problem, and that was mainly because of single stock multiple leverage, right? Which is fine. But in India, a different concept is running. That is called MTF. Look at the growth of the MTF book in the industry. And this link was shared by Nitin Kamath, right? In 2020, the book was around 3,300 crore for the entire market. Today, the entire book is 1,44,000 crore. That means 1,44,000 crore worth of financing is happening in India as we speak today. So I want you guys to just take in that number, because for all the people who think that this number is small, let me tell you, this number is not small. And this has interest aligned to it as well. So when you're investing in the market, great. I know everyone wants to get rich fast, but be very careful when you're trading with leverage, because that can come and hit you very, very, very fast. Okay. And I will show you more stocks in this as well. I'll show you more data in this. And around 2,177 securities are covered in this. Not Nifty 50, not Nifty 500. It has gone to around 2,177 securities. Now, let's say leverage is not bad. Let me give a hypothesis and say that some people might say, Shashank, leverage is not bad. If you know how to use it, great. I completely agree to your point. I'm not saying no at all. Even I'm a trader. I know how to use leverage well. Now, if I'm using leverage in a company that does not move very rapidly, which is a low volatility stock, okay, the average daily range is less, ADR they call it. Let's say I take money and invest in Reliance. Reliance will not swing 10-20% in a day. Me and you both know it. So we are slightly okay with that. Okay. And if people are using MTF, let's say in HDFC Bank, Reliance, ITC, TCS, then it still somewhat makes sense. And by the way, MTF can only be taken on a long position, not a short position. Now let us really see where MTF is being used, and I want to show you that as well. This is a very nice dashboard. If you want, I can put this link in the comment section. You also go through it once, right? I'm not trying to build any fear. Okay, please understand this. And I'm sure SEBI is already looking at all this data, so no problem there. But I'm just trying to show you where MTF book is being used as of now. Now, out of that 1,40,000 crore, 37,000 crores is being used in mega caps, which is 1 lakh crore and above, which is mostly your large caps only. But 36,000 crores, which is as equal to this, is being used between 5,000 crore and 20,000 crores. And in the 500 crore to 5,000 crore market cap category, 16,000 crores of liquidity which is funded by the broker is being used. So it's very difficult to understand how much is artificial liquidity versus how much is real liquidity. Now comes to the sectors. Financials are the highest, capital goods, but others are pretty much more. Now let me show you the stocks, and you will be slightly shocked here to see the stocks as well. Now I'll come to that point also later. Look at the stocks here actually. The most leveraged stocks versus their free float. Now let me explain what this is, right? Let's say a company has a free float capital of 1 lakh crores. Like free float is nothing but the stock price into the number of stocks that are actually there. And let's say a stock has a free float of 100 crores of trading activities happening. Out of that, a company called SBC, 28% of the free float, 28% of the shares that are currently traded in the market are actually MTF based financed trading activity that is happening. The real activity, if you remove this, if the MTF tomorrow something goes wrong with this stock and it falls, then what is going to happen? Mass liquidation will happen and 28% of the additional float on MTF will completely disappear. And this is called SBC. Now, is this a large cap company? I don't know. First, let's check SBC exports chart. Okay, I also don't know. Let's look at it together. Now, look at this chart. Okay, now you will say, Shashank, this is a great chart. See, it is going up constantly. So whoever has bought with leverage, which is in that sheet, have made a lot of money. Agreed, right? But what about situations like this, where the market went down so much? What about this? What about these big red candles? You know what these are? These are consequences of bad liquidity. Okay, when there's no liquidity in the system, it creates an issue. What if the stock price now starts going into lower circuit and a lot of people, 28% of the float is currently with MTF. Now that starts creating a massive issue, right? Then there is one more. Srinagar House of Mangals has around 20% float. Okay, so let me check this company also. Again, let me just show you all of this. This is how this company looks. This has 20% of this float is basically in MTF, right? Now, if you look at SBC Exports, this company is a micro cap company. It's 2,000 crore market cap. This is after it went up 135%. That means it was a 1,000 crore company. So you're telling me that in 1,000 crore company, there are people playing with MTF like there is no tomorrow, right? So isn't that what this is saying, right? So a lot of float, free float is 990 crores and the MTF book on this is 278 crores of MTF. And just look at the names of the company. For example, Indo-Thai, 196 crores is on Indo-Thai. Again, Indo-Thai is an upper circuit, lower circuit stock, right? Look at this. There is Indo-Thai, there is Nazara, there is TFIC. So basically what I can see here, anytime something is trending, people are taking MTF money and putting it in the trend to boost the trend even more. But when that kind of reverses, that becomes a massive problem. And what happens is if MTF book becomes a large portion of free float, then it becomes a big problem in the ecosystem. Now look, if you talk about large cap, this cannot happen because in large cap, the liquidity is enough. The free float is enough. But these are all companies where, you know, they're very small companies and massive amount of the free float is combined with MTF, right? Now look at the squeeze. Now you talk about one more thing called squeeze risk. What is squeeze risk? Because they have heavy margin and they are small and they have a thinly traded float, means the volume is low. It is very easy for someone to just create an unwind opportunity here, which is called like a short squeeze or a long squeeze. It is very easy for a big player to come and short this stock 2-3 times, right? And then all the people who are sitting on massive positions will have to liquidate it, and then that becomes a massive win for it. We saw this happening with Jane Street in the past, but this is a perfect example where Jane Street can again come and play their game. Almost 1,000 crores is in Nazara. Almost 1,000 crores is running in Nazara Technologies. Look at this. MTF of 1,000 crores is running in this company. So this is a very big problem in India. And let me look at more information for you guys, right? Retail leverage, 1.18% of retail's demat equity is funded by MTF. 18,000 crores per year is the interest on the funded book. 18,000 crores. I mean, that's crazy. MTF book versus market liquidity, MTF footprint. Now, as I'm saying again, MTF is not wrong. It is wrong if you're using it in the wrong places. That's why I keep saying MTF is not wrong. Look at this. This also has unusual margin activity. So suddenly we are seeing that there is a standard deviation of 13, and a lot of people have started taking, MTF on Hindustan Unilever. Okay, now let us go check because we're doing it real time. I'm just trying to teach you all of this and learn and make you understand. Look at this. This is where there is massive MTF has been taken on this. 329 crores of a book is being on this, right? What is happening in this? Just because it fell or is buying, it's very weird. That's what I'm trying to tell you. That this is what is going on right now, and this is the net flow that is happening in the MTF book. So it is crazy. It is growing. Obviously, it is growing. That is why everyone's making money. And I would also tell you that this is not a one broker problem. This is an industry-wide stuff, right? It is not a problem also. See, a broker's job is to give tools to the trader to trade, right? It's like saying, don't give F&O to me. Obviously, I will want F&O, right? It is now on the onus of the individual, because what tools I have, that is what I need to use and actually trade. So here it is. Here are the more information if you really want to see. Top funded stocks: HDFC, Reliance, BSC, Geofin, Infosys. These are completely fine. As you saw, 37,000 crores was large cap. Then you start going down and you will see the small caps kicking in. 18,000 crores. Saman Capital has a lot of it. Vodafone Idea has a lot of it, which is very, very, very volatile and so scary. Honestly, Nazara Technologies, which I just showed you. Look at, these are the companies that people are trading left, right, center. EPAC, 2,200 crore company. I mean, come on, guys. This is crazy, right? And this is what is going on. If you look at the broker, this is how the MTF book history per broker has been rising. As I told you, it is not a broker problem. Every broker is here, right? The top broker, actually, contrary to popular belief, is actually ICICI Direct. And then there is Kotak, and then there is HDFC, then there is Zerodha, Angel One, etc., etc., and grows at 3,000. So this is how the book has been growing over a period of time. Again, this is all public data. I will give this to you so you can learn and understand, but just be careful, right? See, the main reason why I did this video, right? Because everyone is looking at South Korea and saying it's a problem. Wow, wow, wow. Please understand, the book has gone from nothing to 1,40,000 crore. And by the way, this is the fastest growing market right now. If you open any broker's investor presentation, I can guarantee, whether you open Angel One or Grow or whatever, the publicly listed players, you will see that their MTF book has gone up at least 2x to 2.5x. And they're not funding it at cheap rates. They're funding it at very aggressive rates, obviously, because they have to raise funding as well or fund it from internal use. So this is something at around 12% to 14% is what the MTF usually goes at. That's the rate. Now, as I said, it is not any broker's fault, mainly because this is a tool that has been given in the ecosystem, right? Just like how F&O is a tool, options are a tool, and MTF is a tool. Now, it is two situations have to happen here. One, SEBI has to overlook it and maybe say, okay, this is something that is dangerous, this is not dangerous, we need to figure it out. Number two, it is the final ownership comes on us, right? The individuals. We should not trade with leverage in risky stocks. You trade with other stuff, you have your risk management rules in place, absolutely fine. But if more and more individuals without knowledge of risk management come and use MTF to trade in small caps and micro caps and nano caps, that is where the line starts getting messy, right? As of now, it has not gone messy, but the book has gone insanely big. And I won't be surprised tomorrow if we get a bull run, or if we even get a half kind of bull run, let's say 20% index growth. I won't be surprised if this MTF book goes up 2x or 3x. And again, you will also not be surprised to know that at that point also, many people will go and buy mid cap and small cap stocks on leverage, and they will not only buy the large cap, because somehow people believe only money is made in mid and small. And that is the problem, right? Now, again, this whole video was only done to educate you. I am not for or against MTF. I believe it's a great tool. Similar to F&O, I believe it's a great tool because I myself personally use all these tools. But when I use it, I ensure I don't blow out my account. I ensure the money that is invested is not borrowed money. Right? When I'm doing MTF, I don't take another loan and then put in MTF and then take 5x leverage. That's exactly what happened in Korea. So I ensure these things are not happening, right? So if you're investing, invest with a good mind, but just be aware of this, that might be some rules that come into this ecosystem. It is high time that some rules come into the ecosystem. So if you are invested in any company that is exposed to this, just keep an eye out on this, because this is coming to a point where regulators will come out and say, let's figure this thing out. There's something wrong here. But again, if you got any value from this entire episode, please click on the subscribe button so that I can keep coming here and giving you more value as and when I get information, right? So I hope you guys learned something from this. I hope you guys enjoyed. We did a slightly deeper dive in this, but I hope you guys enjoyed and liked this episode. Thank you guys. I will see you guys soon. Take care. See you. Bye-bye.